I'm Gopal Jain. I am one of the co-founders of Gaja Capital. Gaja Capital is a homegrown firm with 27 years of history of investing in Indian startups and growth capital and growth stage firms. I went to IIT Delhi for an education. At an early age, I grew an interest in investing and technology. Uh, at Gaja Capital, we are one of the founding members of IDTA, which is the Indian Deep Tech Investors Association. And we, as a group, are also committed to fostering deep tech investing in India, and we, along with the others, have committed. We have made some deep tech investments. We've committed to make more deep tech investments. What are the other ways in which we connect with deep tech? It's through our giving program. We have a giving program called Gaja Gives, and through that we've supported, we'll talk about it, to universities, and I'm very excited to be here. Thank you.
Thank you, Gopal.
My name is Siddharth Pai. I'm the founding partner, CFO, and ESG officer of 314 Capital. We're a homegrown VC fund that invests into technology and technology-enabled companies with a special focus on deep tech as well. In addition to that, I do a fair amount of work when it comes to liaising with the regulators and the government when it comes to public policy. I'm an executive committee chair of the committee member of the Indian Venture Capital Association. I'm also the co-chair of regulatory affairs and sit on the Apex the policy formation body by SEBI when it comes to alternative investments in the country. So I think deep tech is one of those areas that's truly been the alternative of alternatives. We're very fantastic to see it get mainstream as of now. I would love to actually speak more about what that means, what the policy scaffolding and regulatory architecture should look like, and how we can end up taking the handbrakes on Indian innovation and truly allow entrepreneurs spirits to end up actually being unleashed.
Thank you, Siddharth. We just have Nishit joined us. Nishit, please.
Yeah, thank you so much. Sorry for the chaos. Looks like we are a celebrity here. Thank you so much for being present, so many numbers here. My name is Nishit Desai. I happen to be founder of Nishit Desai Associate, India-centric global law firm. So we focus on futuristic technologies, look 10 to 20 years from now, and try to see what new things will be happening and what would be the future strategic, legal, tax, ethical issues. So more on that side. So we try to shape the future of law. Thank you so much.
Thank you, Nishit Bhai. We also have, as Gopal mentioned, this program was organized along with METI by IDTA, Indian Deep Tech Association. We have Sriram and Arun here from IDTA and Celesta. Thank you, Sriram and Arun. I want to say a few words. And Shiv, the Chief Architect.
Great to see all of you here, and this is really interesting to have all our IDTA members, or many of their executive committee members coming together on this panel. I want to particularly thank Chris for lending his time and for all his encouragement to what we're all trying to accomplish. Thank you.
Sure. My name is Sudhir Sethi. I'm from Chirate Ventures. We've been investing in India for, actually this year is our 20th year. And apart from normal investments, we do deep tech investments also. We've done about $300 million worth of deep tech investments in the last 10 years. And very proud to be here, intermingling with yourself. Before I start the session, there's a lot of people at the back. Now, because deep tech is very young and we have a lot of young founders here and young investors and ecosystem players, maybe, and I overheard Gopal say this, the younger people maybe want to sit down in the front. It's not a bad idea, right? Though it means, but that's normal in a startup, right? So if you're okay, some of the younger members, maybe 20 of you, can come here so that we can interact more at the front. This will be the only session in the whole of AI Summit where people were sitting on the floor.
We're used to sitting on the floor.
Yeah. Thank you very much.
Wonderful. Good. Thank you. Sure. And if we can
Excellent.
now try and see if the doors can close.
Yeah, if the doors can close, that'll be helpful. Okay, while people settle down, again, so let me start. We are talking about deep tech. We'll be talking about the three areas: the capital reality check, the AI and beyond thesis. I think in India, deep AI is a very big theme right now of the conference, but we are talking about beyond thesis and robotics and space and other places also. Policy framework, and last but not the least, the role of academic institutions as innovations engines in the country. As a prelude to our discussion, let me give you some numbers. IDTA has tied up with Venture Intelligence, and we have somebody from Venture Intelligence here. Yes. We are releasing India's first deep tech report at 3 p.m., which is in collaboration with Venture Intelligence, NDA as such. And you'll find that's very, very interesting what's coming out as such. But let me give you some highlights, not to steal away the thunder as such. Deep tech investments in India since 2015 have covered over 1,200 companies, about $28 billion worth of investment. So it's not that small for India. And if we look at just AI, and again, some of these definitions, because they were in the past years, may vary a little bit from current definitions, but leaving aside those corrections which have to be made, 12 billion have been in AI. This includes native AI, this includes all the 6-7 layers of AI, and also the enablement of AI in perhaps, as RDF defines it in companies which are in agriculture and so on and so forth. And only in 2025, deep tech investments were about 5 billion, and in AI was half that, about 2.5. So it's not small for India, it's actually pretty big overall. And by stage, interestingly, 70% was in growth and late stage. So I think there are many initiatives which have been taken in the country, and we'll discuss some of those initiatives today as how early stage can also become a much, much bigger allocation overall. So with that, let me start off, and as you know, I have to change from paper to digital. The conference. The first session is on capital reality check. And I'm going to address this question to Siddharth. How do you, Siddharth, Gopal, and Vardhan, how do you think, Siddharth, about capital formation in India as it exists today, and specifically if you could comment on the RDIF intervention and the impact of that? And then I'll go to the next panelist.
I think so. Deep tech has always been it's always been a focus sector for a number of Indian investors, but I don't think it's been the primary bulwark or the nucleus of their entire portfolio. Because what happens, a number of deep tech companies, as you know, very long gestation periods, higher risk, much higher risk that ends up actually entailing. There's a single product risk or a single feature risk that's actually inherent in the business model itself. And even when it comes to the acquisition framework, I don't think we have as many active acquirers of IP in those particular areas of what existed compared to what we're seeing as of now. So what we have actually seen, especially of recent times, is three broad changes. One is the LP appetite, which has now actually become a lot stronger for longer gestation products, for fund managers who don't mind actually spending 15, 20 years. Because the biggest issue that people had with Indian venture and Indian VC was the fact that exists the mistranslation of paper gains to actual hard cash. I think what we've seen in the IPO market as of now has actually shown that Indian assets can find buyers in the public market as well. They can perform exceptionally well over there. Therefore, they've actually seen this happen with the initial thrust of technology-led companies. There's a lot more appetite to end up actually going deeper into the entire stack that's there as of now. That's number one. The second thing we've also seen, and this is something that the RDI fund has actually done, the bridge between research to actual development and commercialization, I think, has actually become a lot stronger as of now. Previously, a large amount of intellectual research would actually be done over here, but developed and actually researched out in the West. We will talk about the university systems, the endowments, and what that entire ecosystem ends up actually looking like also over there. That research part has now actually become a lot stronger because funds like the RDI and initiatives by departments like DST and METI had actually allowed these researchers to start commercialization of their structures and to actually give them the support that they need. The third is actually the maturity of the entire Indian startup ecosystem. Previously, the founder was a jack of all trades where they would have to end up actually being the chief scientist, the CEO, the product engineer, the chief compliance officer, the chief accountant, the chief hiring officer, the chief marketing guy. Everything needs to end up actually happening. But now we've seen a lot more bench strength where quality talent can end up actually going far deeper into what they have to, and the support system actually exists. And even the VCs as well are no longer just the providers of capital. Each of them has a platform team. They give a large amount of support. They help you to end up actually solving those problems. So those are the three changes we've seen from the last 10 years till now. And the RDI has now become a nucleus around which a large amount of capital formation can happen. By being up to 50% of the funds, by giving grants over to research, to development, across the various TRL stages that actually exist, we've actually seen a government program that is acting far more like the private sector than the private sector ended up actually envisioning. And I think that is something that we're grateful for. But as usual, because this is deep tech, it's a long gestation period. I think everyone's just waiting for the 1 lakh crore to get spent in like a year and a half. It's not going to happen. It will take 5, 6, 7 years to happen, and the results will take another decade after that to come. But I think this initial enthusiasm translating to actual investments and then translating to exits and outcomes, that is something that I'm actually looking forward to the most.
Thank you. Maybe I can ask a different question to Gopal. Gopal, 2 questions to you. One, what do you see the role of domestic capital, non-RDIF, and how do you think that is propelling itself in the country? And second is, RDIF is 1 lakh crores, which in today's currency is about $11 billion. And as I think Siddharth mentioned, we are talking about 50% coming from private capital. To supplement that, that's an essential key regulatory requirement, which basically means that whether it is a 10-year cycle for disbursement or a 15-year cycle, and deep tech requires that long cycle, private capital needs to be raised by fund managers and companies about $22 billion. How do you see that happening in the country? Over to Gopal.
Just to give some perspective, I mean, about, say, 25 years ago, Indian venture capital and private equity was about $1 billion a year. Everybody still talks in billions, so I'm going to stick to that. And today, the industry has grown to about $40 billion. So for the entrepreneurs in this room, there's $40 billion annually that investors invest in, say, the startup ecosystem. India's deep tech investing is what, roughly about $2 billion a year now, right? So we are where, it's a very good number. We are where the entire venture capital and private equity ecosystem was, say, 20 years ago. We have a long way to go. China's at about order of magnitude, say 100 billion, 80 to be exact. The US is at 150 billion. So how do we get to those numbers? And the framework is private sector, public sector. Public sector and policy have a huge role to play, especially in the initial stages of any sector when there is market failure. So right now the market isn't there to support deep tech investing. That is the long and short of the answer. It has to be developed, but some very useful initiatives, very important path-breaking initiatives. These remind me of what has happened in other countries like the US and China. And also what happened in India in the early years of the Republic. These initiatives like RDIF, National Semiconductor Mission, the funding for the Anusandhan Foundation, the Quantum Mission, all of these are very important initiatives which are looking to address market failure. They are looking to provide a source of capital, both profit-seeking and grant-based source of capital, to fund deep tech investing either directly or through managers. You have to make a start. We now have the catalyst in place. Governmental capital is not a substitute. It's meant to be a substitute. I think it is upon us now to raise this money from the Indian private sector globally. India lacks a poster child for innovation. So, unlike China, we don't have the global image. It's very difficult to sell India. It's even tougher to sell Indian innovation and deep tech investing to global investors. Coming to Indian investors, again, we have our task cut out, but these initiatives are a starting point. We'll have to work harder. This is not capital that distributors can find for us. We'll have to come up with structures. We'll have to, first of all, success stories to start the virtuous cycle. Because nothing succeeds like greed. Greed is good, right? So nothing succeeds like greed. And then we have to find those pools of capital in the private sector. We have to find them from the public sector. There is a lot of headroom there. A lot of public sector entities haven't used up their headroom for alternative investing. But it's going to take a few years for us to be able to say that, listen, if RDIF, actually what I'd like to say is if RDIF is doing, say, 20,000 crores a year, then ideally the private sector should be doing at least 80,000 crores a year, right? For us to get to that level, it's going to take a few years for us to find that capital. It's going to be a lot of hard work.
Thank you, Gopal. I'm going to ask the next 2 questions. Chris, if I may ask, because you've been a mover and shaker in deploying Indian capital, and then I'm going to go to Sneh and then come to Ravi. Is that okay? Chris, any thoughts on Indian capital, because that's very key so far. And how do you supplement, how do you get Indian capital to come in at a bigger scale?
So the good thing is the money is there, the wealth is there. It's just that it is not coming into the startup ecosystem. But over the last 4-5 years, I have seen a lot more family offices, lot more high net worth individuals starting to invest in the startup ecosystem. I think the push was too hard because they all set up their own small AIFs. What we want now is actually larger AIFs which can do bigger checks, later stage, etc. Hopefully that will happen. And the RDIF, so the backstory of RDIF is, we were all, many of us you see here, were trying to create $1 billion VC fund in India. We don't have a $1 billion Indian capital VC fund. And then we approached the government to set up a $1 billion VC fund. They surprised us by saying, why stop at $1 billion? Here's a $12 billion VC fund. Right? So the government actually took a big step in setting up the RDI fund. They didn't start small, they started with a bang. Now the challenge is, as both Gopal and Sudhir has said, and Sid is also part of the different groups which are working to streamline this absorption capacity. 20,000 crores if RDIF has to invest in a year, because this fund has to be deployed over 6 years. 1 year is over, so only 5 years is left. That means 20,000 every year have to be deployed. There has to be an equivalent, at least an equivalent private capital coming in. Otherwise, that can't be deployed. So absorption capacity, and that's why we need larger funds, India-based, and it need not be 100% India-based. The only thing is the AIF has to be registered in India. The source of funding can be anywhere, and then we need to find good deep tech companies. This only can be invested in deep tech companies to actually absorb this investment. So I hope that it's possible. I'm optimistic because I've seen in the last 3 months tremendous enthusiasm, momentum. Government is moving very fast. Okay, July 2025 was when it was announced. They formulated all the rules, regulations regarding that. They called for startup funds to apply, already opened and closed. This is just the first close. There will be more rounds of that. And the call for startups to apply is already open. Right? So, and we are hoping that within a period of 3 months, the money will be dispersed.
Yeah.
Once the application is accepted. So I'm hopeful, and I'm hoping that this will probably catalyze a deep tech revolution in India.
Thank you. Gopal.
I forgot to mention that perhaps the most concrete evidence of capital formation in the private sector has been the initiative by IDTA. And IDTA members have collectively committed $2 billion, which is not a small amount, to deep tech investing from their existing funds.
In a 3-year time frame.
In a 3-year time frame. And you have to start somewhere. So there is some capital formation starting to happen even in the private sector. That is heartening. Yeah.
No, thank you. And if you look at the US, deep technology investing was in an environment of capital abundance. China was capital abundance. India so far had been capital paucity. I think the message which is coming up is there's a lot of money which is available even today, not going to be available. That's a big change which is happening as such. I just want to take the experience before I come to you, Ravi, of SNE. Now, we are all investors and we are talking about capital. SNE has started a company along with his co-founders called Miko. What has been your experience, both raising domestic and Indian capital? What are the ease of stuff which you think, or ease of raising capital now do you see compared to the last 5 years?
Thank you so much. As I said, we started almost 10 years ago. We started in 2015. And we've seen multiple weathers of this funding cycle. So 2015, I think I heard no from almost 500 investors. And every VC would say, once you get your first revenue, then we talk. And we were building a deep technology product. We built our own AI models over the past 10 years when AI was not heard of at that point of time. And so we spent 2.5 years building product with zero revenue. Like the first 25% of our journey was like this. So most VCs said no. We said we'll build a companion for a friend which will teach a child. He said, build it, sell it, then you come. So those days were there. Then we saw a whole wave of massive funding up to 2021 with all investors funding front, left and center, consumer internet funding boom. And then of course, the deep tech startups were beneficiaries, not direct beneficiaries, but okay, we are putting so much in A, why not let's diversify and put some in B. We were not the prime targets of most institutional venture money at that point of time. Then when the US started collapsing a bit, then after that, growth capital started drying up after 2022, as we all know. But then the good thing that has happened in the past 2-3 years is Indian family office capital has stepped up in a very big way. On our cap table, you will see half of it coming in from institutions, half of it coming in from family offices. And for me personally, more than the capital, what I really enjoy is I interact with every promoter of that family, getting experience. See, Indian families have built their businesses over 50 years with a lot of learnings, how to navigate India, how to navigate the world. And someone who has a wealth of experience of running a business for 20 years, when he's spending time with you and he knows that there's a genuine direction that you're trying to take a quantum leap, which is unheard of. We are 95% of our businesses outside of India. We sell in the US. This is not made in India alone. This is made in India intelligence selling globally. So when they connect with you at a very good level, decisions are faster. The investment cycles, they are willing to support with follow-on capital. We've had family offices come for unheard of before. Family offices come forward and said, we will price the round and we are there to back you for the long term. And my 2015, 16, 17, 18 investors who came in as families, they say, no, we don't want exit. We'll take it an IPO and we'll be with the company for the next 10, 20 years. So the family office ecosystem has come up in a very big manner in India, which has supported, I know because I'm part of a lot of deep tech forums and I'm speaking on behalf of a lot of founders. This is when institutional capital is not available at growth stage, all of them have got very good access to family office capital in the past 2-3 years, which is just excellent. Indian companies raising money in the US, the shifts have changed significantly and the tone has changed significantly in the past 1 year. Since the news of public market exits, if you see the kind of exits that a US company would do, they say they have to scale to 350 million and that's a much longer cycle to be qualified at a decent IPO. Here at $100 million of revenue, companies are taking exit at 10x revenue multiples. Equivalent companies' valuation multiples are much better. So people are preferring Indian businesses from the US. US investors are opening up to invest. This is we've looked at the data, we've seen the sentiments of interactions, and now equivalent investors coming in from US investors coming into Indian capital is opened up because of public market boom which has happened.
So just a question, or not a statement. Out of your 60 million raised, the first 50 was from Indian investors.
Oh, in fact, I would say out of 80 million raised, 70 was from Indian investors.
Okay, so that's a very interesting thing because I know we as investors invest in deep tech. 75% of the companies were supported in seed and Series A round by Indian investors, including institution funds and family offices. That's a very big thing. And now with that statement, I come to Ravi. Ravi, Premji is an investor in India and outside India, right? How do you view, and most of your deep tech investing is outside the country. How do you view investing in India, difference from US, and how do you think we can get global investors to come into India, into this deep technology, and do you think that will become a tsunami over a period of time? Because we still have to raise another $11 billion in the next 6 to 7 years to do the 50% of RDIF.
Thanks, Sudhir. So let me just kind of introduce Premji Invest. We are a family office. So what people are saying or talking about family offices, we are a large Indian family office driven investor. You must have heard about our promoter, Mr. Azim Premji. So yes, family offices are now starting to look actively in the deep tech space. But before I get specifically into Sudhir's question, I see a lot of young faces here. I want to just introduce the thought framework as I was coming here for deep tech. Why is deep tech important? And how do I think about deep tech when I am talking to regulators, government, policymakers? And the first thought that came to me was that it is like infrastructure. It is like a horizontal positive or a negative externality that you will have in every sector of your economy going forward. What does that mean? That means that how your deep tech sector is, it will determine the cars you drive, the phones you use, the laptop that you have, how fast is it, what sort of buffering speeds you have. All of those things are, related to the health of your deep tech sector, right? Now, with that as the framework, take a step back and think how has the government gone about building infrastructure. Now, without getting into technicalities, I can tell you that a lot of push came from the government, from the lending side, from the equity side to relax and infuse capital into infrastructure, build roads, build dams, give all sorts of incentives. Now, in the context of RDIF, what has the government done? Government has said that, okay, if something is ready for out of lab, but is having a funding gap from getting out of lab to the market, that is where the government wants to infuse capital. And what does RDIF say? RDIF says that 50% will be by the government and 50% is by the LPs. So that is the Indian story that the government is doing now, right? Now, how is the US different from India? It's a very long sort of an answer. I'll just sort of give you 2-3 tidbits, right, to think about. In the US, of course, $30 trillion economy, very mature, deep ecosystem where the academia is interlinked with the industry, with the government. Meaning what? We are talking about a jurisdiction which invented the internet, which came up with GPS, right? And all of this came up through either defense, government funding, or some other means of academia, right? So very different ecosystem. When you come into India, and so the startups are very different, right? So the kind of innovation that happens there is very different, which is what we see. So it is not only about the capital, or it is not only about the talent. It is an ecosystem where in an informal setting, expertise is exchanged. Sudhir, that
Yes.
would be I would say, what catalyzes US investments. I was reading 40% of US family offices invest in deep tech or in related, if they deploy $100, 40% would be within these sectors. India is different. Like my colleague said, that where is your ARR? If you go market, first Indians talk about, is there a revenue stream? So that I think is the difference. But RDIF and various of our VCs and family offices are now stepping into this space because we see an opportunity in India, because talent is there, capital is coming, and we see that this now, of course, we'll discuss the other questions later, how policy incentives and other things can develop that architecture and that ecosystem. That's the way I would put it. Just one more thing I'll just add. CalPERS is the California Pension Fund. Again, I was seeing about 15 to 20% of CalPERS money goes into private equity and venture capital. India, and this is Sid Pai's one of his topics, and I've seen him argue this very passionately before the government, that imagine if your provident fund or your LIC type of money starts coming into this sector.
It's huge.
It's huge.
It's huge. And it's hopefully about to happen.
Yeah. So that's where I would draw the sort of, when we look at both India, US, this is what we see. But we see a lot of opportunity in India because of the talent.
So do we get it that now Premji will start investing in deep tech in India?
Yes, absolutely.
Absolutely.
Absolutely. That's why we are here. And that's why we are also founding members of IDTA.
Yeah. Okay. Gopal, you wanted to make a point.
I just wanted to say that, listen, coming back to India, all of you are here. I just want, India's innovation moment is here. Innovation requires a long time. Like one of the companies in our portfolio started 25 years ago out of IIM Ahmedabad, right? And so innovation requires a long time to achieve. It also therefore requires patient capital, long-term capital to support it. many things are happening here which will completely change the availability of capital for innovation. Therefore, and in this room are potential innovators. And what I'm saying is that, yes, there are many parts of the ecosystem, how universities behave, how investors behave, and we are at the moment of innovation. Reminds me, I was there in IIT in 91 when India changed, and we took the initial steps in this country to open up entrepreneurship to every Indian. And I think what's happening around us right now reminds me of that moment, that we are opening up innovation to every Indian. It's now no longer around workarounds, which is jugaad. It is about boring through to create fresh technologies. And the longest distance between two dots is a straight line. But workarounds are always faster. So this is the time for boring through and finding innovation. There is a sea change in the amount of capital available. We can always say it is less compared to where it is in China and the US, but compared to where it was 2 or 3 years ago, it's a groundswell.
Yeah, absolutely.
If I just add one thing to that, just very quickly. I think during the entire summit, a large number of people have heard, what the US is doing this, China is doing this,
it
what
doesn't
India
matter.
doing, etc. I think here's the most important part. The US is the largest developed nation, so the different league. China had spent 30 years learning from the best, doing a whole bunch of policy changes, building up their kind of asset base and the show base to end up actually doing that. I think going back to the Cold War, you had these two large elephants that end up actually fighting. India actually truly represents a non-aligned movement. We are actually the middle path, and as Indians have always proclaimed that, we are the middle path that the rest of the world will end up actually following. I think the chaos that's actually inherent in India and the frugality that's actually there breeds innovation. I think the moment you have a large amount of surplus, you never look at optimization. You never look at how things can actually be better. It's just like, let's just throw cash at it. Something will end up actually managing. It doesn't happen that way. The greatest deep tech innovations across the world have always happened from a place of frugality when they had to end up actually making something better. And that's actually inherent to what a large number of people over here end up actually doing. And some of the larger problems that people faced 10, 15, 25 years ago have actually been solved. We have capital. We do have a government that's not looking at deep tech and trying to figure out what. There's a joke that some of the ministers have actually cracked when they parked it publicly, so we can actually say it, that the reason why the IT revolution happened in Bangalore was so far from Delhi. Delhi had no idea what's actually happening in Bangalore. That's how it could actually get incubated, and that's how it ended up actually building up. But now in deep tech, they're no longer looking at a handbrake to end up actually stopping it. So we can't speak about capital, we can speak about policy. But I think the most important part of that is actually the assets. Unless we actually see people get off the fence, end up actually starting up, we're never going to end up seeing it. And as we as people, we look at failure and are like, failure is like failing an exam in school or something. It's something bad, it's something we're ashamed about. It's not. The whole process of entrepreneurship is iterative. For every way you find that doesn't work, you've actually learned, you can end up actually applying that knowledge to something else. So I think the biggest takeaway for anyone over here is, it is a lot more fun to end up actually building when there's chaos than to go to some place where everything works and just being another cog in that machine. Become a builder, you don't have to end up actually becoming a cog.
Chris and then Nishad Bhai.
So, I have been working with the research ecosystem and the startup ecosystem over the last 10 years. And I can tell you with confidence that what is required is to think big. What is required is to actually nudge these initiatives a little bit. And we have examples of technology from India going global.
Yeah.
Okay. I will give you another example of technology from India that's gone global. Of course, all of you have heard of UIDI. But how many of you have heard of MOSIP? MOSIP. One hand partly raised. There's one hand. That's Model Open Source Identity Program. It's running in 29 countries across the world. 300 million people have got IDs with that. And pretty soon, 1 billion people will get ID from that. And on top of that, citizen services are being delivered. Our Diksha, which is a education system that again developed through philanthropy, running in many schools in India. It's actually running in many schools in Africa. And many of these are now moving to developed countries. So technology from India, from a developing country going across the world, you will see now more and more examples of that.
Yeah.
Coming down the line, I can tell you 2D materials, which are the next promising materials for semiconductors, because we need to reduce the power required for AI, right? We need green AI. So 2D materials, analog computing, okay, developing the entire software stack on analog computing. Quantum, of course, there are many startups which are already now getting commercial in India. You may have seen Bharatjan's presentation today morning at 11:30. But what you didn't realize, or what you may not have fully realized, is today when you actually use voice translation using AI, your language is translated and the LLM is in English. It's not native in our language.
Yep.
Okay, so there is an opportunity to develop multimodal, multilinguistic AI, which is what Bharatjan is doing now.
Right now. Yeah.
Right? These are all, I would say, the next round of innovation, which will all now go from India to the world, because very few countries are just monolingual, and even US is now multilingual. They will require a new set of LLMs if they want to do native AI.
Thank you, Chris. My one statement, and then I'll come to Nishit. I think fundamentally one message which is perhaps underlying in this discussion so far is deep tech requires longer periods of gestation. Investors have to ask the right questions, not just after 1 year, what's your revenue model and profit model. And I think investors have to change themselves, because investors in India have been asking the same question because of obviously, return related issues. And I think the RDIF effort along with the private effort is going to change that, because investors will not be able to survive if they don't ask the right question. So with that statement, there are many policy frameworks, and Nishal bhai, this question is to you. There are many policy frameworks which are undergoing change in the country for enabling deep tech investing. Could you highlight the top 2 which you think are important to be done in the next 6 months to 12 months?
Sudhir, thank you very much. What I see is that, let me just give my work significantly in the US as well. I think time has come to look at innovation in all sectors. One side is technology side, but second thing is policy side. A lot of innovations are needed in policy side. And I think a lot of benchmarks are also available around the world. So the way in which we look at is this, that whenever new technology comes, a new product comes, one side the industry wants to promote and grow, government's concern is to contain the bad actors. Okay. So balancing the two is a very strategic, important task. This is one part of the game. Second, that even in terms of focus, once there are 2 stacks. One is the foundational technologies, whether it is AI, whether robotics, whether it's quantum, whether it's other ones, photonics and so on and so forth. A lot of time and investment is required in the foundational technology. But then the application side is where we have great opportunity. For example, you converge AI with CRISPR and robotics, okay? That would lead you to cyborgs, cyber organs, right? Ambience intelligence, digital twins. There are so many things that you can do beyond normal AI. Second thing I find here, slight difference, when in China or in the US I see entrepreneurs, when they think of a market, they think global market. How big is the global market? In India, most of the time I feel, oh, India is a big market. Okay, immediate low-hanging fruit. India is a great laboratory, I say. It's a great laboratory because the cost of experimentation is low, scalability is high. So you have great opportunity. Trump has helped us to some extent to retain talent here. So, you've got talent set. All that we need to do is how do you tap the capital? Today, local capital has come, which is a great thing. But I believe that we really need significantly large capital. If you see the foundational technology otherwise, and in fact, we have to learn how to play musical chair. Why I'm telling this is that, first of all, if you look at OpenAI, $100 billion, right? Now, we are talking at a very different level today. And the needs are very large. Okay. So when you think of global markets and global products, that is where really, and secondly, that when you get investment, typically what would happen, people, investment also is a function of capital raise is of a function of exits. There is long term, which we are all agree that. But at the same time, we can find mechanisms and innovate mechanism so that after 4, 5, 6 years, there is somebody else comes in. Then there is somebody else comes in. So startup, early stage funding to growth equity to private equity to IPO maybe 10, 15 years from now. Who knows? But and for 10 years, IPO market was in dumps, right? So suddenly at the moment is going on, everybody wants to ride on that, but you don't know how long it lasts. I'm not saying it should not last. Please don't get me wrong. But at the same time, we have to have a mechanism, both in terms of policy framework. For example, today our Companies Act, 2013, right, is still old wine in new bottle, with respect. Okay, they are good attempt made. Income Tax Act, new act is coming. It's still somewhat similar. Okay, so there are major innovations required because when I go around the world, you can have so many different instruments and you can structure, because instruments are nothing else but risk management tools. So you have different sets of risk. You know, third thing I find in policy, particularly grants are very important. Now, again, tax is a big problem. Whether grant is an income or not. You must have experienced that, correct? And it's a big, lawyers take up half the grants. Our accountants take remaining 50%. Entrepreneur is very happy because we are also entrepreneurs. So please. And so, but I'm saying that if you treat grant as a taxable income, you know, you have to go around with this kind of thing so much. So there is a lot of need for innovation. One point which my friend made, the grid is good. He talked in a constructive sense. Please don't take it negatively. It's constructive sense. Because grid could be bad. Okay, Michael Douglas taught us that lesson early, but it has been taken to a different level now. I would suggest that most important thing after building great companies, governance, okay, and ethics, organizational behavior, these are the subjects you cannot miss out. You know, while you're building a business, be very careful. One of the other thing, I'm sorry I'm going a little long, is that when early stage people start working on that, when they start doing plans, because they want money, so there is a lot of temptation to fudge numbers, estimate numbers, okay? And after it starts doing good business, good funding, the next thing is you fudge accounts and financial, okay? I tell you, this is what is the biggest killer. Just be very careful, be patient, and those who are patient, that kind of money you want it. You don't want people to pressurize you to just create revenue and, especially in deep tech. So I'm sorry I went on too long.
No, thank you
very much. But as a lawyer,
much.
what else can I do? I don't make money the way in which you guys make it. So, but if he would have come to me, I would have done 1 cent.
No, thank you, Rishad. This is very interesting. I have just 2 more questions. I know we are running short of time. So if 2 questions, short answers, then I'd like to, for 5 minutes, open to the audience. Okay? Arun, exit, Nishad in fact alluded to that. Exits are very important. History of exits in India, secondaries, IPOs, M&A. M&A is very, very weak in India. Do you think M&A will become very important in technology divesting? If so, what do you think is happening today and what do you think is happening in the future? And then I'll come to the question for Chris.
No, I think on M&A, as we see more deep tech companies coming out of India, certainly we will see global M&As from India. We've already seen that in smaller ways, but I would expect to see more. Second, I think the Indian companies too will start looking at that. Today, again, we're seeing them in small ways, but I would expect that M&A will be a major source of exit going forward.
Okay, thank you. Chris, last question. Deep tech and AI. Everybody is talking about how global markets are opening up, but there are challenges in India. How do you improve farm productivity on a half-acre average land size? How do you remove grain storage losses? There are many Indian problems to be solved. Do you think that are you seeing some green shoots or a tsunami of those deep tech entrepreneurs who are addressing Indian challenges at scale, okay? And do you think that's going to be very important, not just a global solution?
In fact, I would say that yes, we are all talking about LLMs and voice response systems and things like that. The opportunity is actually application of AI in agriculture, in healthcare, in education, in automotive systems. All the cars will have now AI-enabled, even GPS systems and things like that. So, if the opportunity in the foundational layer, which is the deep tech layer, is about, let's say, 100 million, the opportunity in the application layer is probably 1 billion, 10 times that.
Yeah.
So that's the opportunity. And then from India to the world, I don't remember now who said this, where the cost of doing innovation in India is 1/5 the cost. Right, so you have 1/5 the cost and the market is the entire world. That opportunity is significant in India. And I'm seeing now, I met, every day I meet entrepreneurs, startup founders, etc. And the kind of problems they're actually attempting to solve is very exciting and very inspiring actually. So with this money, and that's the reason why I'm extremely glad all these people are sitting in front of you and saying that we're going to fund all of you, right? So it's a very exciting period. And I'm also glad because then RDI will get deployed, RDI fund will get deployed. So I'm hopeful that the next 10 years, India will become the deep tech capital of the world, I believe.
Thank you, very nice. So I know there are a lot of questions. We have actually 5 minutes to the end of this. And as a Sutradhar, I may have to...
I just wanted to say that we have Anand Kanama from
Sorry?
Applied Materials, who's joined, was a big supporter of the IDTA, and I thought I want to welcome him. And
Okay,
he wanted to
excellent,
say a
thank
few-
you.
Thank you, Arun and Nishit, for inviting Applied Materials to be part of IDTA. I think 2 observations here, right, from the discussion. I think it'll be useful to think less about what the stock markets are, M&A. My view of it is you build great companies, the exits will take care of themselves, right? And the question is, given the talent here in the room and outside the room, right, how do you build the next NVIDIA? How do you build the next SpaceX? How do you build the next Grok or IR Labs or and so on, right? Because I don't see that discussion happening, right? Everybody is like, oh, the stock market is X, I'm going to do Y, and I'm going to make Z money. If you see, we have been investing in deep tech over 20 years, right? And I don't see that discussion happening in the companies in Israel, for example. Nobody is building a company saying that I'll sell it, and I'll do it, right? They're starting and saying is, can I build a big company because I'm solving a big problem? I would encourage that level of discussion. And the second thing on the deep tech, that somebody mentioned, they've been investing in company for 25 years. Also figure out how you can reduce the risk, right? Because we have seen these cycles, like in clean tech, people came and went out. In internet, people came in, came out. So I'm just worried, like 2 years from now, we shouldn't have tourists leaving part, and there's going to be a death of the deep tech sector, right? So just an observation is, like, one is, I think the boundaries of what to think about is not a billion exit. Like, companies are now exiting at $1 trillion plus, right? How do you build a $1 trillion plus company because you're solving a $1 trillion plus value thing, right? That's what I encourage. But great team, and look forward to being part of IDTA.
Thank you. I'm going to open this to, I think we have time for 3 questions. Please name yourself. Please address the question to one of us here, and then we'll answer, and then we go to second and third. Yes, please.
Question only, not comment.
Yeah.
Actually, it's a big question, sir. So,
Big question or a long question?
long question.
Long question.
I'll make it in 30 seconds.
Already taken 30
Yeah,
seconds.
sure,
Take 30 seconds to ask the question.
So, okay, rather than asking these many questions straightforward, I'm asking.
One question.
Yeah. Right now, just like a rapid fire, who are ready for a 10 CR investment without seeing the pitch deck? Because there are many startups who cannot express themselves. If you say about Bharat Edge and all, I would like to compare it with Google and Meta. But when it comes to same for us startups, they are going to compare it with Sarvam AI and Bashni and say that how are you different, and we are not going to invest. And as sir said, they are going to, of course, reject for the first
Don't
500
mistake
times. So,
investing
yeah.
for gambling. I think that's number one. And as Nishit also said, investors have to do their diligence. Third, there are enough LLMs that are very articulate. I'm fairly certain you can put in what you want and make something articulate. The hygiene is crucial.
There is a way to prepare for funding without a deck. Your caliber and your credentials must be outstanding. In our world, that happens all the time. We meet people, we commit funding without seeing a business plan. This happens in the US, this happens to some extent in India. But please understand, for that you have to be like a listen to me. It has to be you have to be 3 standard or 4 standard deviations better than the normal.
Okay.
So if you are 3 or 4 standard deviations exceptional, you don't need a business plan. You just need to announce to the world, I want to be an innovator. There'll be capital.
So I think the answer to that is very simple. You would like any investor, including this room, to listen to you. I think without hesitation, I can speak on behalf of all investors. They will listen to you, right to the investors. Somebody will listen to you in each firm. Okay? There's a lady here up front. 1 minute, please. There's a lady here up front.
Hello panel, I'm Pankari. I'm building in AI as well. My question right now is actually to Sid Pai, as everyone calls you. You mentioned frugality in investment, right? I absolutely understand. It actually helps. It promotes cost-effective solutions. However, when this similar kind of ideas, at least like at the early stage, in India receive, say, a 1-2 CR check, right? And at a certain dilution. And in the US, they do receive a huge amount, which is 4x, 5 times, right? The kind of amount that we're talking about. Do you think Indian startups will be able to scale at global, or will be able to build for globe?
We will, because I think, see, the important part is investors end up funding it basis what the entrepreneur wants. Indian entrepreneurs come and say, I will do this in 50 lakhs, I will do this in a crore. An American entrepreneur says, I need 15 million, ends up actually raising 7. I think increase your ambitions. I think that's the most part. Frugality doesn't mean that you end up putting handcuffs on yourself. Frugality means you have a large pool that you don't have to dip into whenever you need to, but you end up optimizing at the edge. I think that optimization is what's more important, not the fact that you end up putting handcuffs on yourself and then cry about the fact that you can't compete with the rest of the world.
Yeah, I think the answer to that is very simple. Ask for more, but prove that, or talk about the fact that this is deserved from a point of view of where you will spend that money. Many of the investments we made are in the range of 7 to 14 crores at the day one. Okay, such. Third question, please. Yes.
Sudhir, just one question.
I'm pointing at him, please. Yeah, there is a sequence in my head right now. Okay, yes, please.
Go on, you can be loud.
You can be loud, yeah.
Just a quick question. In 2026 or 2027, if you have to evaluate a startup, would you look at their team size, or if a startup makes use of only AI and AI agents to solve a problem, that would cut the bill? Thank you.
I think, size really doesn't end up mattering, I think, in a large number of these things. I think what's actually important is the competence of the entrepreneur and the team they end up actually bringing in. Whether you are using AI, whether you're using a large number of people sitting over there for that matter, those are choices of yours. There are pros and cons that end up actually coming in, but VC investing can't be boiled down to a set of 5 rubrics and hacks, unlike what the LLMs end up actually generating. So it depends on what you're actually building, how much cash you need to end up building it, what your chances of success are, what are you bringing to the table. If you're primarily an integrator of other people's ideas and an intermediary, there's really not much value that ends up getting added. So look at value added, not the ingredients that go into it.
We have one more question. This gentleman here.
You just need 4 good people.
One more, sorry?
I just wanted to say that, listen, 4 is a magical number, right? At a startup stage, most startups, just you need 4 good people. So you can enhance yourself with AI and all. This is not about 40 people. As you are looking to build a team, it's not about tens of people. It's about 2, 3, 4 good people.
We have one more question. Can you please? Right to all of them.
Who gives you the best deal?
Yeah, okay, that's it.
Who gives you the best deal?
Right to all of us. write to all of us, find out offline. One of them will say yes or no. Okay.
I think
I'm
broadly
going to halt
look
all the
at-
questions right now. I'm going to halt all the questions right now because all of us will be available outside after this session. I know we are ending at this. Again, thank you to METI and IDTA for organizing this function. And thank you all
Actually,
for coming here.
Sudhir, I
Arun,
also
would you
want
like
to
say a few words.
Yeah,